Welcome to the Oanda Market Pulse Morning Market Snapshot. My name's Craig Erlam, Senior Market Analyst at Oanda. Now, as you can see, the key real event that we've had in the markets today has been ECB President Mario Draghi's speech. It was during this speech that he basically reaffirmed the ECB's dovish position. During the speech, he claimed that they will do what they must to raise inflation as quickly as possible. Now, this is kind of reminiscent of the speech he gave back in 2012. The ECB will do whatever it takes to preserve the euro. Now, of course, this is far less significant, and it's had a far less significant impact on the markets at the time. The euro was at risk of collapse, and that was the first real hint that they gave about the policy steps that followed. Whereas with this, we've had these hints before, so the market impact was actually fairly muted. The only place we really saw a response was in the euro itself, which fell around 50 pips against the dollar, which we'll come to in a minute. But again, this just reaffirms the position. It does sound like now we're going to get stimulus at the meeting in a couple of weeks' time, and it sounds as though it's going to be some form of deposit rate cut, because he did again highlight the fact that a cut to the deposit rate could actually assist with the asset purchase program, make it more efficient. So it looks as though we're getting a deposit rate cut, and it looks as though we may even get an increase on the asset purchase facility as well. Now, one other thing I wanted to highlight today was the fact that we do have a couple of Fed speeches. We've got William Dudley and James Bullard speaking. Only William Dudley of the two at the moment is an actual FOMC voting member, and they're both due to speak today. We should really focus on these comments. Now, while ECB easing and Fed rate hike appear to be priced in, as you can see from this chart, this is the CME group Fed Watch. This is based on Fed funds futures, and a Fed rate hike is currently 72% priced in for December. So while these are heavily priced in now, unlikely to be too much more priced in ahead of the meetings themselves, we are going to be keeping an eye on what these Fed officials have to say. Make sure that there is a consensus growing within the Fed, and ensure that really, if we see any suggestion that the data is not strong enough, or that they may wait another month or two, especially if that comes from a typically hawkish member, then that could have an impact, and we could see we could see some movement in the markets. I do think the dollar is quite overbought at the moment, so really what we're looking for is any suggestion that we might not actually get this rate hike come December. Now, taking a look at the charts, a couple of things I wanted to highlight. First being dollar yen, because we have seen, like I say, the dollar pairing some of these gains over the past 24 hours or so, and we've got this ascending trend line here, which I wanted to highlight on the 4-hour chart, because we have seen it kind of broken today, so we may see a bit more pressure to the downside off the back of that break, which would bring 122.20, these prior lows, but then the key region here between 121 and 122 into focus. Like I said, this ascending trend line is coming under significant pressure. Given the fact that we haven't seen a clean break of it at this stage, I would like to see a daily close of it before I start to consider a move back to this 121 to 122 region. The other two charts I wanted to highlight are both euro related, so we've got euro dollar here, and this is what I wanted to highlight here, is the fact that against the dollar, this is what I'm saying about the fact that I think both decisions from the ECB and the Fed may be largely priced in, because we've had this strong hint again from the ECB's Mario Draghi, but we only saw it pull back around 50 pips, and we have seen it stabilise, pairing some of these losses since, and we're back around that 107 level, and we're still, I know we haven't seen a lower low, but over the last 3 lower lows, we are seeing this bullish divergence with momentum being lost along the way. So that suggests to me that maybe we are looking a little bit oversold here, a little bit overstretched in the market. Against the pound, the euro's trading near these prior lows. You can see these key regions right now. First one is 0.70. Of course, that's a key psychological level as well, coming under significant pressure now for 4 days in a row. If we do see a break of this level, then we may see a move back to these 69.30 to 69.50 levels again. This year's lows could come under pressure, but as it stands, this 70 level does seem to be holding up very well. And even though we had that selling earlier on the back of Draghi's comments, we have seen it pair most of those losses now, and is trading back near the day's open. For more in-depth news and analysis, check out Oanda Market Pulse at MarketPulse.com. You can also find out more about Oanda and sign up for a free demo account at Oanda.com. Here you'll also get access to Oanda Forex Labs, which has a lot of great tools aimed at helping you in your trading.